Happy Wednesday. It is Wednesday at noon. We are going to have fun today. We're going to get some lunch. Well, y'all going to get some lunch. I'm going to talk to Nick Morrone, who is at United Community Bank United Community Mortgage. And we are going to discuss his $20,000 grant program, which people don't know about. So we're going to get all the deets on it today. Nick should be hopping on here in just a second. Let's see. I'm super excited. This is going to be so good. This is information that you guys, we need, because people are talking about closing costs. They're talking about all of that. And we absolutely need this information. $20,000 grants. We need that information. Let's see. Nick, I am accepting your request. Let's see if that works. Hope everybody had a good holiday. Most of you know that I, of course, ran the Peachtree Road race. Uh-oh, Nick, it says you're unable to join. Let's see. Let's try it again. Let's see if that worked. There you are. Hi, Nick.
Great morning. How's it today?
I am good. I'm good.
Happy,
Super excited to talk to you.
I appreciate that. Happy Wednesday. Glad to be talking to you. You're a superstar, so I know that people always enjoy the content and the information that you put out. So thank you for that.
I appreciate that. Look at you. I appreciate that. You know how to make a girl blush. I love
How was
that.
your run? How was your run?
Which one? You talking about Peachtree?
Yes.
So funny you ask. I actually PR'd this year. I didn't think I was, but I actually PR'd. I ran it in an hour and 22 minutes, and which was 4 minutes faster than I've done it in the past couple of years. My fastest, my personal best for the Peachtree is an hour and 18. It's either 18 or 14 minutes, one of the two. But this, of course, was pre plantar fasciitis, so I'm super excited. I ran it this year. I had a little bit of knee pain, but my feet did not hurt. I was hydrated. I had a great time, and thank you for asking. Yes, I
That's
love
all. Congratulations.
Peachtree.
Probably
Is hard. I don't think people understand how hard Peachtree is. That's hard. And for
gotta
those who don't
do
know, it is a
it.
10K. It's 6.2 miles from Lenox Mall all the way to Piedmont. So if you live in Atlanta, you know that Peachtree is a long street. And you also know that there is no sun cover on Peachtree. That sun is just going to beam on you and it's not going nowhere. Have you ever done Peachtree before, Nick?
I have not. I have not ran. I'm sure I've walked a few times along the path, but I have not done any running. It has not been committed. I walked a few times to a few restaurants along the way. That's about it.
Would you like to join me next year and do Peachtree with me?
Yeah, let's get me ready for it.
I love it. I absolutely love it. So, Nick, I know who you are, but go ahead and introduce yourself to the people.
Absolutely. So I like to say all this so in case anybody watches it later, we'll be able to post this so you can join us later as well. So my name is Nick Morrone. I'm a mortgage lender with United Community. I am licensed in Georgia, Florida, North Carolina, South Carolina, Tennessee, and Alabama. I do mortgages only, so that's just what I do. Before this, I actually used to do car loans as well, and I processed credit card applications as well. So I've done consumer and mortgage lending. Let's see, born and raised here in Georgia, so definitely know a lot of the products around here. And what I like to go over is some of the products in the states that I'm licensed in. So again, Georgia, Florida, North Carolina, South Carolina, Tennessee, and Alabama. I know I'm licensed there, and I know you or your team has people that you can connect with people here in Georgia or even outside of Georgia. So some people that, oh, we're located here, we can't help, but they don't realize we're actually connected and we have a team that can help in other states as well. So
Oh, oh yeah, absolutely. Nick, we had a conversation, I want to say it's about 2 weeks ago, at the new construction neighborhood, and you were telling me about this grant that you have. And one, I was super intrigued because people are always asking about down payment assistance, right? They always want the down payment assistance money, but unfortunately, a lot of people are not reading what's in these, fine print when it comes to a lot of the down payment assistance programs. A lot of those programs have been changing as of late. But your product, your $20,000 grant, was one in which that it was super, super intriguing. So I wanted to get you on. We're gonna talk about a lot of stuff, it not even just today but down the line, but today I definitely wanted to have a conversation about the grant because I think it's very vital for buyers, especially in this market, to get money. If there's money for them to get, let's definitely find a way to get for them to get this money. So can you briefly explain the program and how the grant works?
Absolutely. So, again, there's a lot of different programs out there. There's assistance, there's grants, there's 100% financing. So, there's a lot of first time homeowner programs out there. But what I like to tell people is there's different scores and there's different requirements for each of them. So, the $20,000 in particular, that's part of a U Advantage program, which just is broken up into two different parts. So, there's the traditional first time homeowners. Traditional first time homeowners are eligible for up to $17,500 in assistance. And that one is in Georgia, Florida, North Carolina, South Carolina, and Alabama. So up to $17,500 in assistance. That's for traditional first time homeowners. There's a second component to that called community partners. So I'm going to read this just to make sure I say it correctly. So
Okay.
same as the first time homeowners, that's 17,500. But the difference is if you're a community partner, instead of 17,500 for first time homeowners, those professions can get up to $20,000. So still need to be first time homeowners, but they can be eligible for up to $20,000 instead of 17,500. So that's a difference of 2,500. So let me tell you about that. Community partners, what is that? Law enforcement, educators, healthcare workers, firefighters, first responders, and veterans. They can get up to $20,000 in assistance with the down payment or closing cost when purchasing a home. So there's different requirements out there that, for example, there might be credit score requirements. There's income limitations. There's even geographic locations. But if you know anybody that is wanting to be a first-time homeowner, they may be eligible for up to 17,500. And if you know anyone, and again, in what we call them community partners or heroes, those are the law enforcement, educators, healthcare workers, firefighters, first responders, veterans. They can get up to $20,000 if they qualify.
Now, is this 20,000 in addition to the 17.5, or this is 20,000 separate from the 17.5?
Great question. It's 17,500 or 20,000.
Gotcha. Okay.
The other,
So
they're
it
going to
sounds
one.
gotcha. Okay, so it sounds very similar to the old neighbor next door, good neighbor next door program they used to have. But I think your program offers a much wider range of career paths. So kudos to y'all. We love that.
Yeah, most people don't realize. So the score as well. So and again, it's going to depend on your debt to income ratio and a lot of other things. So I just have to say this as a disclaimer. This is just meant to be informational. We definitely need to schedule a consultation with either myself, you go in depth on it, but to give people general ideas, just to get an idea of the how the program can help. It typically you either need a 640 credit score,
Mhm.
typically the minimum credit score. So some people they don't realize, or they say, "Oh, I'm going to be a first-time home buyer," or "Oh, I'm a police officer," but they don't realize a lot of times that there's still credit requirements. For example, you could be a first-time homeowner, but if your score is not high enough, you may not be eligible. So the score starts around 640. And important to note that that is the minimum. So 640 is the minimum. However, a lot of people don't realize as your score gets better, a lot of times you can qualify for a higher amount. So, for example, I've had people that went from a 640 score to a 700 credit score, and they were able to qualify for $30,000, $40,000 more. So it's also not a cut and dry like, oh, if you get this, this is how much you're qualified for. Because again, your score meeting the minimum is great. You might get the assistance for the full 17,500 or the 20,000, but the higher your score is, the assistance might stay the same, but the actual amount that you qualify for can go up. So you can get a more expensive home if that's what you're looking for.
Wow. That by itself is, we could jump off right now. Like that's all that, that's amazing news. Like that's, everybody's talking about, home ownership is, no, it's not affordable, da da da. And here you are, you're giving people an idea, right? Or an option to help them buy their first home. Because a lot of times people don't understand your first home doesn't necessarily have to be your forever home. Sometimes your first home is your first investment property, right? Because that's just kind of where the trajectory goes. But I certainly get it. Like we were talking about before, a lot of the down payment assistance programs have changed some of their rules and their guidelines. So the program that you guys have, is this a true grant, or are there conditions that might, might trigger a repayment, or this is a true grant, fully forgivable? How does that work?
Great question. So it is a grant and it can be forgivable, but here's what people don't realize, and you were talking about the fine print. So with grants, they can be forgivable, but why it's important to say can be is because there's certain metrics that have to be met to be forgivable. One, lenders want to see you in the property for a minimum of 5 years. So if you sell your home or refinance before 5 years, that amount of grant can be paid back. So what we tell people is on a grant, you need to, and depending on which one, but in particular this one, you need to be in the home for at least 5 years, and you have to keep that lien on it for at least 5 years so it can be forgivable. Number two, important to notate, and let's say you're supposed to technically reside and as your primary property for 5 years. So there are certain conditions that for grants to not be paid back. Some of the minimum conditions, again, if you're getting a grant, 5 years, they want to see that you're living in that home for 5 years. Number two, they want you to keep that home, not sell it, because again, the idea is to get the grant to be forgiven. And then you have to be careful because certain ones like this one, if you refinance before the 5 years, that money can be paid back as well. So again, it is a 5 year commitment to be forgiven.
Now, is it the full amount of the 20,000 or the 17,500, or is it a prorated amount based upon how many years you've been in the property?
Great question. I'd need to look up that one uh, to see if both of them. I think it's forgivable over time, but I don't want to misadvise anyone. So I'd need to look that up, and uh, I can see if I can email somebody if they'll tell me now. But I'll look it up either way, and we can talk about it if I don't get the answer.
Love it, love it, love it.
So what
So,
that means, what you're referring to is sometimes,
mhm,
and I just can't remember, they update stuff all the time. Some grants will allow, let's say you've lived there half of the 5 years, for half of that amount to be forgiven. Is that what you're
absolutely, yeah.
say, hey, it doesn't matter if you've been there for 4 years and 11 months, you need to remain for 5 years. So that's a great question. Definitely need to look into that just because they re-up this one and they technically changed some of the guidelines all the time on some of these programs. So I want to look at that. I believe it's forgivable year over year, but I need to check to make sure.
Understandable. So I know that you talked about you need a 640 credit score. Is that correct? So you need
Yes.
a 640 credit score, and you need to be a first-time home buyer. Are there any other requirements? Any credit, not credit, income? Who's eligible for this grant?
So great question. So I always like to tell people this because it's a common thing that people ask as well. So people say, "Oh, I bought a home 20 years ago, so I'm my first-time homeowner." So here's what I like to talk to people about because lenders misunderstand it, agents misunderstand it, and family and friends misunderstand it.
All the time.
The first-time homeowner again, it has to be 3 years, 36 months from the date of the sale of your home. So it doesn't matter if you bought the home in 2000 and you say, oh, that's 20 plus years ago. I'm a first time homeowner. No, it's 36 months from the day you sold it. So, for example, let's say you bought it in 2018 and you sold it in 2021. From now to 2021, when you sold it, that's over 36 months. So, again, go off of, for first time homeowners, what grants and assistant programs want to see is if you purchased the home before, number one, if you've never purchased obviously, if you've never owned a home, you've never been a homeowner. But if you have owned a home in the past, it needs to be 36 months from the time that you got off of that deed. So
Mhm.
you sold it, just the time that you got off of that deed, 36 months. And then you're a first time homeowner again. And then as far as income limits, this is where it can be a little tricky. So grants are based off of the location. So let me explain this. So again, the grant locations are Alabama, Florida, Georgia, North Carolina, and South Carolina. What is important to note on these is that each county has a different income limit and household income limit. So I've seen people qualify with as little as $60,000 of income. I've seen larger households qualify depending on, and they look at your who's living in the household. So it's called household income. Even if they're not on the loan, programs look for household income, certain ones. So depending on your family size, the more kids, the more higher up your household income can be. So for example, the household income for two parents and one child is going to be different than the household income for, let's say, two parents and three children. So I've seen income limits around 60,000, and I've seen income limits around $90,000, $98,000, in fact. So again, it's going to depend on the county that you're living in.
Mm-hmm.
Obviously, the state, the county that you're living in, your household size. So, for example, the lender needs to know if you've got kids, let us know about that. If you've got a significant other, even if they're not on the loan, make sure the lender is aware of that, so they can make sure that you don't get in a situation where, oh, you make too much. So again, they're not a cut and dry. It could be as low as 60,000 in some areas. It could be as high as 95, 98,000 in other areas.
Gotcha, gotcha, gotcha. Okay, so is it truly the people that live in your home, or is it dependent? Or does that matter?
What do you mean by that, live in your
So,
home?
so sometimes your dependents don't live with you, but they still depend on you. Does that make sense?
Yes, dependents count.
Okay. That answers that question, Nick.
So
See?
they'll actually fill out the form, and they will tell us who their dependents are as well. So,
Got
question.
Okay. So I know we talked about that this grant is geographical specific, right? But is it property specific? Like, does it have to be a house, a townhome, a condo, multifamily? What will it apply to?
Very good question. So, let's say you qualify for the program. You can find a single family home, you can find a townhome, or you can actually find a condo. Condos are a little more specific because condos, and we'll talk about that in a second, single family homes, townhomes, and condos can be eligible.
Okay.
They're in the county. So let's say you're looking in Fulton County, you're eligible for it, and you find a single family home. Great. There's not a particular list of, oh, you can only select from these homes. So you go out, and the great thing is, you and your agent, you're going to show them the homes. And there's not a particular home that we're going to say, oh, go to look at this home, it's eligible. With single family homes and townhomes, if you qualify, they qualify. Condos are a little different. So, what most people don't know, on a condo, on top of you qualifying, the HOA has to qualify. So anybody that's purchased a single family or townhome, they themselves get qualified. And what that means is you get qualified based off of your credit score, your credit profile, your income, your bank statements, things like that. So the lender's going to take your application, look up your income, pull your credit, and get you qualified. On a condo only, theirs is a little bit tricky. Condos in general the applicant has to get qualified based off of their credit and income, and the condo associations get qualified.
Okay.
And that's called warrantable, or if it's an FHA, it has to be on the FHA approved condo list. If it's VA, it has to be a VA approved condo. So condos, we always put an asterisk. That was my little asterisk sign by it, because you can be qualified, but the condo itself, the HOA, not be qualified. So single family homes and townhomes, as long as it passes the appraisal and your inspection,
Mm-hmm.
qualified. Condos always have an asterisk, because in addition to you getting qualified, the association itself must go through qualifying through the approval process.
Gotcha. So we talked about it being specific to different geographic areas, and I heard you say counties. Are there certain counties, and we could talk about, of course, Georgia. Are there certain counties in Georgia that don't apply or don't qualify?
Great question. So out of those states I listed, every county is eligible. So in Alabama, Florida, Georgia, North Carolina, South Carolina, every county, so Georgia's got like, I think, 100 counties,
If
all 100 are eligible. Remember, the difference between the counties is going to be the income limits and the household size.
yeah,
So every county, you can go Georgia, Gwinnett, Fulton, DeKalb, Clayton, Cobb, Henry, Walton, Forsyth, Cherokee, Rockdale, Newton, Douglas, for all of them. So find the county that you love. You're going to help them with that, because what people typically do is, they consult you as an agent.
Mhm.
Hey, I always see your videos, I see your posts. I definitely want you to help. You always find people their dream home. And then what you typically do is you get to know a little information about them. Oh, are you looking at a single family home? You want 2 bedrooms, 4 bedrooms? What are your likes and dislikes? And then they tell you that. But before you go out to show them a home, you send them over to us as the lender, and we say, hey, your agent is right before you actually go look at the homes in person. It's fine that you're looking on her portal. It's fine that you're looking on an online website, but we need, before you go in person, we need to get you pre-approved. And how you do that, again, is the lender is going to pull your credit.
Mhm.
It's your pay stubs. If you're working, they're going to get your pay stubs, W-2s, tax returns. If you're retired, they're going to want to see disability statements, social security income, pension.
Mhm.
They're going to want to see your bank statements. Uh, Big things on these programs. These programs have helped a lot of people. If you ever go to my page, I probably closed 400 or 500 homes. And out of the 400 or 500 homes, probably a good half, I would say 200, have been either like a DPA, down payment assistance, a grant, or 100% financing. But what I always try to educate people on this is, yes, you may see our success stories where somebody bought a home with basically no money,
Mhm.
but the average person on these programs still does need three things that I always educate people on. One is your earnest money of 1%. So make that as easy as possible. In Georgia, sellers want to see 1% earnest money, which is a deposit on the home. Let's use easy numbers. You find a $300,000 home and you qualify, and you might get the 17,500 or the 20,000 if you're a community partner. But here's your contribution: 1% earnest money. That's so the seller will take the home off the market. If it's a $250,000 home, 1% is 2,500. Your appraisal: the appraiser is the one that goes out and looks, he or she looks at the value of the home. Is the home worth the 250 that you and your agent are offering? Appraisals in Georgia typically run about $650.
Mhm.
Know this better than anybody. Inspections necessarily aren't required in Georgia. They're not required like the earnest money or the appraisal. They're not required by the lender, but they're highly recommended. So in your experience, what do you typically see on top of the 1% earnest money? So again, if it's $250,000 home, 1% is 2,500, and then $650 is the appraisal. So that's still about $3,000.
Mhm.
What are you seeing for inspections? Because we always like to tell people what the charges are so there's no surprises.
I always tell my clients, hey, I'm conservative with my numbers always, but I always tell them to expect about $500 for their home inspection. That way, if it's less than 500, phenomenal. And then, of course, if they want to add other inspections on their termite, pests, sewer scopes, whatever, they at least have the money put to the side to look to do those things. So, but yeah, around 500 for sure.
So that's a great point. So with these programs, we educate people. So anybody that's watching this later or watching it now, with these programs, you may be eligible for the 17,500. That probably, depending on the price of the home, I've seen that 17,500 cover the entire down payment. No down payment at all. But be advised, you still may need about $3,000 to $3,500 out of pocket, so that way you can secure the home. Again, part of that goes to the seller,
Hmm.
to as a deposit to hold it, and then of course that money can then be applied to their closing cost or down payment. And then the other part of that is the $650, which goes to the appraisal
Hmm.
or appraiser. But other than that, people have bought a home, resale, new construction, with less than $3,500 out of pocket. I mean, several people that I know, I probably this year probably have helped, this year maybe 10 already, that bought a home with less than $3,500.
Wow.
10 out of all the people I've helped, at least 10 of them have bought a home this year with $3,500.
Wow. That's, I think I've seen one person this year that has bought a home for less than 10. So the fact that you have sold at least 10 that have purchased a home for less than 3,500 is phenomenal. This is clearly a phenomenal program that is an amazing program. And yeah, I don't know why more people don't know about this program. Like they need to. They absolutely need to.
So
100%.
the good thing about it, and again, what we tell people is one thing first, it goes towards your down payment first. So
Mhm.
if payment, let's say your down payment is only $10,000 and you're getting 20. here's how people structure it, and this is how they are able to come out with only 3,500. So I had a client, their down payment was around 10,000, but they got 17,500. So,
Okay.
well, what happened? I don't want to lose that 7,500, which I agree with them. You don't want to, if you get 17,500, but your down payment's only 10, they're not going to give you the difference. Number one, they're not going to give you $7,500 in cash. I just have to say that it's not
Okay.
that give it to you, but we don't want you to lose it. So what we do is, I know you work very hard to get the sellers to pay a good portion of closing or even all of closing. So my scenario that I had with another agent, we got 17,500. The down payment was around 10. So that 7,500 we were able to use because the agent did a great job on getting the seller to pay closing costs. We were able to use that 7,500 towards their points. And what you know what that means, a lot of
They
people,
brought down their rate.
they bought down their rates. So that's a great thing. You know about this. You talk to a lot of people on this about how you can buy a home, and sometimes with the grant money or even the seller's credit, you can get your interest rate down. So a lot of people hear all these phenomenal interest rates. They're like, oh, my friend got this interest rate. But what they don't realize is a lot of times either the seller's paying for it or the grant program's paying for it. So my client, the seller paid pretty much all of the closing costs. My client was able to take the money, put it towards her interest rate. Her interest rate went down, and she probably got a mortgage payment. I think it was around $250 cheaper per month for the next 30 years.
Love.
So it's a fixed rate program. Your rate doesn't change, but when you take a buy down, and what that is for everybody on here that might be concerned, like, oh, what do you mean the interest rate can go up or down? Let's say your interest rate today is 6.5%. Let's just say that's your interest rate. Some people will take that leftover money, that grant money, because they don't want to lose it. If you don't use it, you lose it. And instead of 0.5%, they'll say, hey, take part of my grant and let me have a rate of 6%. So rather than 6.5, I want it permanently at 6% where it'll never go above 6. And then my payment might go down $100, $200, $300 because they did that. So again, first things first, it's going to go to your down payment or closing cost. Or if you've got leftover money after the seller's done with their money, we're putting it towards the interest rate so you do not lose that money, because we don't want you to lose that money that you're eligible for.
I love that. I love that. So, are there any like funding caps or deadlines that people need to know about? Because grant money typically is allotted a certain amount per year, and then once it's done, it's done. So, are there any, caps, meaning like once, this amount is done, it's gone, or are there any deadlines that people need to be aware of for this program?
So, great question. You are correct. Most grants, once they're out, they're out. We rolled out this program, and then it was first time it was out around 3 months
Okay.
after they stopped. The funding went out. Then we did another allotment, probably a week and a half ago. An allotment was dropped. So based off of last time, the first increment, uh, it ran out in about 3 months. 3 months, and then it was a couple months off, and then they just redid it. I think probably 10 days ago we got the new drop. So I don't know when it'll run out. I would say if it's as anything like last time, I wouldn't think it would last over 3 months. So what we're talking to people about is these are people that are looking to purchase in the next 90 days, because grants are truly first come first serve. So what that means is even if you're qualified and you're eligible, you can't reserve that grant money until you go under contract. So it's not when you get pre-approved or
Mhm.
want to buy a home, it's when you actually locate the home. So based off of last time, I would say it's probably not going to last over 90 days. Now it could be a little longer than that.
Mhm.
Again, but right now we're hitting in the summer months, and as you know, it could be shorter because summer months are the hottest. Everybody, no pun intended, everybody wants to move in the summer.
Mhm.
Your phone is constantly blowing up with people to help. So yeah, I would say 3 months, but really, I mean,
It's
it's
hard.
and it could be 1 month or 2 months, depending on how many people see this video and are like, hey, we're ready to move now. So great question. I would say if you're ready to move, definitely call you first. You always give out your information, go over it with them. We're going to let people know if it does run out. So if they qualify and that's what they're wanting, we will. But I would say let's just aim for 90 days or less
Mhm.
and be committed and ready. I definitely think if you're wanting a grant program where you can buy with less than $5,000 or less than 3,500, let's aim for less than 90 days to get you pre-approved, qualified, and into your home. So that way we can make sure we can try to secure the funds. So again, don't worry if there are anytime like when this one ran out, there are backup programs, as you know. So you know this one well, like the 100% program. That's the one with no down payment. That one doesn't ever run out. Georgia Dream, that one I don't ever see run out either. So there are backups to this one if
Yeah.
anybody ever gets it or tries to look for a home and it runs out. So again, I wouldn't think it would last more than 90 days. Hopefully it does, because then we can help even more people. But depending on apply, it could be 1 month.
Wow. Nick, thank you so, so much. This was awesome. I hope people wrote all the jewels that you dropped down because there were several. Nick, thank you so, so much for hopping on IG Live with me today and having lunch with me. Where can people reach out to you, contact you if they want more information, not only about this grant, but they're ready to buy a house and they need to get pre-approved?
Great question. So my cell phone's the easiest. My cell phone number is 678-367-1059. And again, 678-367-1059. Yes, I'm a millennial. I'm probably the worst at social media. So please, my cell phone, again, 678-367-1059. Or my email, and it's my first name underscore last name, and I'll give it to you. It's Nick, Nick underscore, so the underscore line, last name Morrone, Morrone, at sign ucbi.com. So again, Nick underscore Morrone at ucbi.com. Those are the easiest ways to reach me.
Love it. Thank you so much again, Nick. Have a phenomenal weekend, and I'll talk to you soon.
You too. And thanks for all the work that you're doing in the community. We definitely need more people that are connected like you, that are taking the time to advocate for others, because you definitely go out of your way to help everybody. So
Thank you so much. I appreciate that.
absolutely. We'll talk soon.
Okay.
Bye.